Bitcoin is the first real asset class we've seen in a generation or more, and it's the first, synthetic digital asset class, the first truly scarce asset. I think this is the decade for it to monetize. And look, if you thought that it was 95% likely to fail, it would be rational to put 1% of your assets into it. Right? Even if you thought it was likely to fail, because if it doesn't fail on paper, if you look at the engineering and the math, there's no reason why it shouldn't grow to $100 trillion, from where it is right now by a factor of 100. So there's no logical reason not to want to own digital property. It's technically superior, economically superior, morally, ethically, legally, politically superior form of property.
Bitcoin and other cryptocurrencies are moving higher in the price charts, and the token Ether continued to outperform. Bitcoin, the leading cryptocurrency, was up 3% over the past 24 hours to above $42,500. It had hit that mark over the weekend after surging above $40,000 last Friday, but gave up some of the gains on Monday. Smaller peer Ether was even more buoyant, rising nearly 4% to breach the psychologically important $3,000 mark. The token underpinning the Ethereum blockchain network had steadily climbed from below $2,800 since Friday. Although Bitcoin and Ether remain well off of all-time highs of $68,990 and $4,865 respectively, reached in early November. But this new price trend is looking optimistic for the cryptocurrencies. Hello and welcome to Money Talks. In today's video, Bitcoin evangelist and MicroStrategy CEO Michael Saylor updates about Bitcoin and its role as a reserve currency, increasing institutional adoption, and the risks, if any, associated with Bitcoin compared to other assets. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
So once you understand it, it really just comes down to a question of, what is your risk tolerance at whatever stage in your life? Are you an institution? Are you an individual? And then what is your assessment of its dominance in this category? So in the early stage of the asset class, there's a massive advantage to the early adopters, right? So like a nation that moves early right now, if you were a country and you were to move into it right now, like let's take UAE. The UAE could print $10 billion worth of DRAM, buy Bitcoin. If they were to do that and then announce that, right, their $10 billion Bitcoin position would almost certainly triple, quadruple. They'd be sitting on top of $50 billion of Bitcoin. It would actually strengthen the DRAM. It's actually, there really is no loss here, right? It's almost impossible to lose because it's one of those things that is naturally accretive, a reflexive trade. The fact that you actually entered into the transaction decreased the risk for everyone to follow you. That's the game theory of it. So the question is, what property can you own that cannot be expropriated away, inflated away, taxed away? And the only thing, or the best thing we've discovered, is digital property in the form of Bitcoin, because the ownership of it consists of having the private keys or the password to the Bitcoin, which you can carry in your head if you need to. And the property is in cyberspace. It doesn't have a political nexus. If you own a building in a country, then the mayor, the governor, and the regulators in the nation all have the power to regulate or expropriate or tax away the building.
Yep.
But Bitcoin doesn't have nexus in the real world. It's nexus in cyberspace. It could sit on a satellite. It could sit floating in the middle of the ocean. And it's portable. So if you have $1 billion of gold, it would take you 6 months and $5 million to move it, and you would have to get permission of every jurisdiction to move it. Mm-hmm. If you had $1 billion of Bitcoin, you could move it, in theory, even in a split second, right? Just by transferring the keys. So you could move Bitcoin 1 million times a second for free by transferring the keys. And so once people realize that publicly traded companies might start to buy this or would start to buy this, the risk of owning it decreased and it became naturally accretive. In our case, it drove up our stock by a factor of 4 just by buying Bitcoin. We started with 500 million in cash, earning 0% interest. And today we have more than $5 billion of Bitcoin, which is appreciating at the rate that Bitcoin is appreciating, definitely better than 0% we expect. It's been 140% a year for a decade, but even if it was appreciating at 10% or 5%, it would be 1,000 times better than what we had. And so there are a lot of countries that have balance sheets. And the question is, what do you hold on your balance sheet? Is it gold? Well, gold's dead money. It's been dead for a decade. There's 0% return on gold. Are you going to own other sovereign debt? Well, if you actually put your money into T-bills, 10 or 30-year treasuries, they're yielding 1.8 to 2.2% interest. But everybody knows that the money supply is expanding at somewhere in the range of 20% in the Western world. It was expanding at 10% for a decade, and it doubled. So you've got a negative monetary yield, a negative real yield if you own debt. You've got a negative real yield if you own gold. That just leaves you with property, real estate property, or equity. So if you were holding $1 billion worth of pesos, and if the Argentine currency is losing 40% of its value a year, your risk rate is 40%, which means that you're 100% guaranteed to lose 40% of your money. So if you invest in some other stock, right, the question is, is it likely to go to 0 with a 60% probability?
Yeah.
Right. Or whatever it is, right? Because if there's a 40% probability of the stock going to 0, that's the same as 100% probability of losing 40% of your money. All right.
Yep.
So as the inflation rate of the currency that you're doing business in goes up, the risk of doing nothing goes up. And in the extreme, where you have hyperinflation, like in Venezuela or someplace where the inflation rate gets to more than 100%, at some point you realize that your $1 billion is going to be worth nothing in 10 years. Most of the world is going to dollarize. Like at the rate that dollars are available as stable coins in a trusted form on a high-speed network, we're going to see that spread. I think that the stable coin market for US dollars, it grew from like 20 or 30 billion dollars to 160.
Yep, it's 95%. I believe it's 95% of all transactions are settled in USD pegged stable coins.
Yeah, so that's exploding, and there's a massive demand for that because people don't trust their own currency, but also they don't trust the banks. So the real appeal of the crypto economy is convert weak currency to strong currency, convert weak property to strong property, convert property that is custodied by a counterparty, a third party, right, into self-custodied property, and then be able to move it to the most trustworthy counterparty that'll give you the highest yield on it.
Yep.
Right. And that's the revolutionary breakthrough of digital assets and digital property, that you have that option, and you didn't have that option 10 years ago.
No.
And so every other currency crisis, every other economic crisis in the history of the world, and especially the modern economy, people only had, what could they do? They could buy diamonds, they could buy gold, they could buy artwork. And in every currency crisis of the past 100 years, we didn't have digital assets. We didn't have the crypto economy. So if you have wealth and you want to protect it, your options are buy art, buy diamonds, buy gold.
Although Bitcoin's movements have been contained in part by the Ukraine conflict and the Federal Reserve's hawkishness, the crypto kingpin has been stuck between $35,000 and $45,000 since mid-January, unable to reach the $50,000 level it held at the end of 2021. A Bitcoin long to short positions ratio on Binance is at 1.5, the same level it was at on February 24th when Russia invaded. Meanwhile, data from Glassnode shows a jump in the proportion of Bitcoin supply being absorbed by entities with a low statistical history of spending it, and this is suggesting a bullish market structure for the medium-long term. So what are your thoughts about Bitcoin's recent price jump? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.